What are the big trends in advisor M&A right now? Joined today by Eric Leeper from FP Transitions to discuss just that. Eric, good morning. How are you doing?
I'm doing great. Thanks for having me today.
Where do things stand in the marketplace from where we sit right now?
So right now the M&A marketplace is still incredibly robust. I mean, there was some concern last year with the actions that the Fed was taking and some of the frothiness that had created in the capital markets that M&A was going to start to slip a little bit. But we haven't seen that actually play out in the transactions that we did last year, and we certainly haven't seen it impact our prospective deal pipeline either. So it remains incredibly strong and resilient from our vantage point right now.
From the standpoint of advisors, is this right now still that seller's market that it's been for quite some time?
It's definitely still a seller's market. The demand far outstrips the supply, but we are starting to see certain sellers who might have been on the sidelines over the last 3 to 5 years are starting to enter the market with aspirations that are beyond curiosity.
Of course.
And one of the more prominent trends that we're seeing is that we're actually seeing interest in M&A happen at a younger age. It used to be that advisors would only entertain M&A conversations when they were wanting to retire. And what we've found is that advisors are actually engaging in these strategic conversations much earlier, and we're starting to see the tail of the M&A transaction extend. For example, an advisor might be in their late 50s, might be struggling with scale, and they'll be looking at a transaction more on the M side, the merger side, so that they can bring the expertise of a larger, more sophisticated firm into their practice, and they're not taking all of the operational risk of doing that. That was a transaction that we didn't see very often 10 years ago, that we're starting to see a lot more of these days.
And it's more than just a tuck-in, it sounds like. It's a true merger of equals you're seeing?
Well, yeah, not a merger of equals.
Okay.
Normally there is a liquidity component to it.
Okay.
But we're starting to see stock being used as a deal structuring element much more prominently now, and also compensation structures that exist past the execution of the deal. For example, paying them for growth in the practice after the transaction for a period of 5 years until they reach that eventual retirement date. So we're starting to see, if you look at the way deals are constructed, they're not just point in time, I sell my business and I leave. They're starting to extend out 3, sometimes as long as 10 years. The actual composition of the deal is going to be based off of the need of the selling advisor and the interest of the buyer. So we're still not seeing a lot of 100% stock swaps. Those are still relatively uncommon, but a seller taking 30 to 50% of the total consideration in the buyer's stock is much more common.
So with all these trends in mind, what's next? What do you think the future holds for M&A and for deals amongst financial advisors?
Yeah, I mean that's the top question right now. I think we're going to see more of what we saw last year,
Yes.
which is stock deals and seeing how the influence of equity plays into the deal structure. And I think there's also going to be a much stronger focus on compensation for these practices going forward. How do you actually take a team that might be struggling with scale and actually bring them into the next generation? So we're seeing mergers and acquisitions actually play a really important role in how to get these, what are objectively smaller practices to the next level through scale and expertise of larger acquirers. So I think that's going to continue to accelerate, and I still think we're going to see very, very strong demand for these practices for the foreseeable future.
Absolutely huge demand, amazing things happening in M&A. Eric, great insights. Thanks so much for chatting.
Thank you.
For Edge TV, I'm Matt Ackerman.